gold prices will rise and keep rising if they lower them 50 basis points. So as we go on the air, gold is at $2,585 per ounce. Now you go to your top trends for 2024, and it's a golden year for gold. Gold is up some $550 an ounce since we made that forecast. So the lower U.S. cuts the rates, the more other central banks will cut their rates. And as we said, the higher gold prices will go. We've only been saying this for about a year and a half.
Last week, the Federal Reserve made headlines with its announcement of a significant 50 basis point rate cut, igniting expectations for further reductions and propelling gold prices to unprecedented heights. On September 23rd, gold futures traded on the COMEX, the world's largest gold futures exchange, surged to an all-time high of $2,653 per ounce. This remarkable increase reflects approximately a 30% rise in gold prices since the start of the year, with prices consistently setting new records throughout 2024. The Fed's decision to lower the benchmark interest rate substantially boosted both spot and future gold prices, which were already on an upward trend. Rising geopolitical tensions in the Middle East, which typically enhance gold's status as a safe haven asset during times of instability, further amplified this momentum. According to Gerald Celente, founder and director of the Trends Research Institute and publisher of the Trends Journal, the decline in interest rates creates a strong potential for continued increases in gold prices. Market expectations indicate that the Fed will maintain its rate-cutting strategy, suggesting that gold prices may rise shortly. This policy shift comes on the heels of more than 2 years of elevated interest rates aimed at curbing inflation, but it has resulted in increasingly burdensome consumer borrowing costs. In the immediate aftermath of this rate cut, gold prices have jumped by an impressive 29% this year, while silver has seen an even more remarkable rise of 34%. Historically, gold has been regarded as a reliable safe haven during economic uncertainty and inflation. Its performance during such times indicates that it retains value when other investments falter. With interest rates lower, the opportunity cost of holding non-yielding assets like gold diminishes, making it an appealing investment choice for those looking to protect their wealth in uncertain economic climates. As investors seek stability amidst volatility, gold's allure as a safeguard against potential financial turmoil is likely to grow even stronger. We will present clips from Gerald Celente's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
The markets and why they went up. And we said in the Trends Journal that they would go up like this if they lowered interest rates 50 basis points. And we also said gold prices will rise and keep rising if they lower them 50 basis points. So as we go on the air, gold is at $2,585 per ounce. Now you go to your top trends for 2024, and it's a golden year for gold. That's right. Gold is up some $550 an ounce since we made that forecast. So you don't want to subscribe to the Trends Journal for $2.56 a week. You could subscribe to the Wall Street Journal. That gives you nothing anymore. That's the way it is. So the headline, Fed goes big with half-point raise. So what is it going to do? Well, credit card balances, small businesses, variable rate loans, but not only the variable rate loans to small businesses, but for those banksters that are going to go bust because they're going to be default on those variable rate loans when the buildings go bust, the office buildings. So yeah, they're going to come down a bit on the variable rate loans on those office buildings, but ain't going to make any difference. And what else do we have? And by the way, most of the street, a lot of the street, we only put the facts in the Trends Journal. On Tuesday, we said that CNBC survey said it was only going to be a 25 basis point drop. We didn't say what it was going to be because it's a guess. This is from the the Wall Street Journal. Rate cuts pave way for overseas central banks. We've been saying this for months. They're going to wait until the Fed cuts rates, and they're all in the same club. They know when the Fed's going to cut it, and they cut it. But the Bank of England didn't cut their rates today, which is, to me, just stupid, because the EU economy is an FUCK EU economy, UK economy, rather. It's bad. So they didn't cut them, but a lot of countries are, because they can't cut rates if the U.S. rates are high, because their currencies will go down. So the lower U.S. cuts the rates, the more other central banks will cut their rates. And as we said, the higher gold prices will go. We've only been saying this for about a year and a half. August home sales dropped more than expected as prices set new records. This is CNBC. You ready? The median price of a home in the United States, $416,000. It went up 3.1% from August of last year. We've been saying that despite the high interest rates, it's in your magazine, the Trends Journal. Again, you go to trendsjournal.com, that there won't be a housing slump, even when everybody else is saying it. And then you look at the data. The median price, again, $416,700. There were 1.35 million units for sale at the end of August, according to the data. That's up 0.7% from July, and nearly 23% from year on year. But it's still below the 6-month supply on average. So yes, it's getting bad, but with these interest rates going down, the mortgage rates are going to go down too.
The Federal Reserve's recent rate hikes have significantly impacted the housing market, resulting in a sharp decline in home sales. However, home prices have continued to set record highs despite this drop. This situation underscores the complexity of the housing market, which is influenced by various factors beyond interest rates, making it challenging to predict the precise effects of the Fed's monetary policies. Higher interest rates create substantial challenges for home buyers, leading to increased monthly payments, while sellers face reduced demand and lower offers. Following a peak of 8% last fall, mortgage rates have recently declined to their lowest levels in 2 years, potentially providing a boost for prospective buyers. Mike Frattantoni, chief economist at the Mortgage Bankers Association, indicates that if mortgage rates remain lower, it could support a stronger than typical fall housing market. He believes this trend may point to a significant rebound in activity as spring approaches. Recent data from August reveals an unexpected decline in home sales, even as prices continue to rise. The median home price in the U.S. has reached $416,000, reflecting a 3.1% increase compared to last year. Gerald notes a significant housing downturn is unlikely, with the inventory at 1.35 million homes, slightly higher than in July, but still below the 6-month supply typically associated with a balanced market. A potential decrease in interest rates could lead to lower mortgage rates, enhancing affordability for buyers. However, the market presents contrasting trends. Homes priced above $750,000 sell well, while those under $500,000 struggle to gain interest, highlighting a growing wealth gap. As home sales decline, many investors increasingly turn to gold as a safe haven amid rising mortgage costs and economic uncertainty. Given Gerald Celente's insights, do you believe gold prices will continue to rise shortly? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.